Okay, we're going to go ahead and get started. Hope everyone had a good weekend. So move over. So I know I'll still have some people join. Let me turn my screen on. I want to kind of just give you my thoughts to start out the live stream, give you my thoughts on the market, get some more people to join, and then we can go from there, okay? Let me set a couple things I want to situate on my computer here. Situate it. Okay, let's turn this on. Okay. So I think we should be good to go. So hope everyone's having a good weekend. So I think there's been some weekend optimism out there. If you read the headlines and you read the news, there's a lot of hope, and I believe they were trying to make sure the markets are stable. So I do think the narrative, is really that we're seeing is really just an attempt to stabilize the markets. And so I think every time a geopolitical shock hits the markets, this is the same pattern. We see this time and time again when this happens. First there's the actual disruption. You have attacks, supply chain shocks, collapse in shipping, soaring commodity prices, right? You have all this disruption. But then the weekend comes and the markets close, and then there's this optimism cycle that hits. Suddenly, everywhere, there are headlines about diplomacy, coalition escorts, reopening of sea lanes, and progress towards stabilization. I mean, this pattern is playing out again, and right now in this conflict, again, surrounding this situation with Iran in the Strait of Hormuz. But if you actually read the details and you actually understand what is happening in the last 24 to 48 hours, this supposed progress actually appears very thin, and in many cases is contradicted by the events that are actually occurring at the same time. So again, positive headlines is narrative management. This is a very simple reason I think governments want to, they want to emphasize these positive developments during a crisis. And there's one reason: financial stability. The Strait of Hormuz, as you know, carries 20% of the world's oil supply, making it the most important energy choke point on Earth. But when disruptions occur there, of course, oil prices surge, inflation expectations rise, stock markets sell off, global recession risks increase. In fact, the crisis has already pushed oil prices sharply higher and disrupted millions of barrels per day of production across Gulf producers. In that environment, governments and financial authorities have an obvious incentive to keep markets calm. So when a crisis is unfolding in real time, it's not unusual to see this messaging, emphasizing diplomacy that has not actually happened, solutions that are actually not operational, and military strategies that are just theoretical. This doesn't mean the news is false, but it often means the timeline being implied is unrealistic. And of course, markets move on headlines, and reality moves on logistics. The strait is still effectively closed as of tonight, or this morning, depending on where you live. Despite the talk about reopening the shipping lanes, the facts are stark. The strait has experienced a collapse in traffic, with tanker movement dropping dramatically as companies refuse to enter a war zone. Multiple vessels have been attacked, and shipping insurers have raised war risk premiums sharply. Even if hostilities stopped tomorrow, shipping companies would still face insurance risk, crew refusal, mine threats, missile threats. Confidence will not return overnight. The naval escort plan sounds good that they've been proposing, but it's flawed. The most widely discussed solution this weekend was a coalition naval escort system. Idea sounds simple. Warships escort oil tankers through the strait and protect them from attack. But once you examine the military realities and strategy, it becomes far more complicated. Even optimistic estimates suggest the escort operations can move only 3 to 4 ships per day, with significant naval resources. Under normal conditions, the strait carries dozens of large tankers daily, so the escorts would not restore normal flow. They would only move a fraction of the global supply. The mine problem alone could take weeks. Before escorts can even begin safely escorting ships, another obstacle exists: naval mines. Iran has thousands of mines and has reportedly deployed some already during the crisis. Mine clearing is slow and dangerous. The operation requires specialized ships, sonar sweeps, remotely operated vehicles, and helicopters. And while mines are being cleared, ships conducting the clearing operation become easy targets for missiles or drones. Even defense analysts warn that clearing safe shipping corridors could take weeks or longer. Escorting tankers turns warships into targets. There's another flaw. When tankers is escorted, the warships protecting it become a high-value target. Iran has spent years preparing an anti-access strategy designed specifically to exploit this situation. Their arsenal includes anti-ship cruise missiles, naval mines, drone boats, fast attack swarm boats, submarines, coastal missile batteries. This combination allows Iran to attack ships from multiple directions simultaneously. In other words, escorts concentrate targets rather than eliminate the risk. The geography also favors Iran. One of the most overlooked facts in this crisis is geography. The Straits of Hormuz is extremely narrow. The shipping lanes are only a few kilometers wide and lie very close to the Iranian coastline. That gives Iran several major advantages: short supply lines, Iranian boats and missiles launch from nearby coastal bases. 2. Mass attack capabilities. Swarms of small boats can overwhelm large naval ships. 3. Shore-based missiles. Anti-ship missiles can be fired from land. And 4. Hidden mine layers. Small civilian vessels can secretly deploy mines. In naval strategy, this is called A2AD, anti-access area denial, and the strait is almost a perfect environment for it. Iran has already demonstrated these tactics. Recent reports show Iran using exactly this asymmetric method. These include drone attacks on ships, explosive suicide boats disguised as fishing vessels, missile strikes against Gulf infrastructure. Iran has also reportedly built large number of unmanned drone boats and naval drones designed specifically to disrupt shipping traffic. This is not a theoretical strategy. It's already being used. Even Western analysts admit the strait is a kill box. Some military analysts have described the strait bluntly: a confined maritime zone where large naval forces will become vulnerable. The narrow waterway and proximity to Iran's coast make it difficult for the traditional naval fleets to operate safely, especially when facing mines, drones, and missile attacks simultaneously, which raises a serious question. If escorts truly solve the problem, why hasn't the strait already opened? There's also this confidence problem. Even if the coalition managed to escort ships through the strait, another issue remains: this confidence in actually wanting to go into the strait. Shipping companies operate on risk calculations. Even if one tanker is hit inside an escorted convoy, insurance costs could explode, crews could refuse to sail, and companies suspend operations once again. This means a single successful attack could collapse the entire escort strategy. And Iran does not need to stop every ship. It only needs to hit a few. So the bottom line is this weekend's headlines suggest stabilization, but the underlying reality remains unchanged. The Strait of Hormuz is still disrupted. Iran continues attacking regional infrastructure. Naval escort plans are still theoretical. Mines and asymmetrical tactics heavily favor Iran. And the simple truth is this: even if every country in the world agreed tomorrow to escort ships through the strait, the operational challenges and military risks would remain enormous, which is why the recent wave of optimism may be less about solving the crisis, but more about preventing markets from panicking before Monday morning. So that's what I see going on this weekend, guys. I wanted to tell everyone how I felt about the news. Now let's take a look at the charts and then we can go into your questions. So when we look at the charts, let me go ahead and share my screen. Give me a second to do that. Turn off this video capture. We'll go into screen capture. Okay. So I think people could see my screen. Yes, I did change our price for the super chat because what I was finding is I was getting so many super chats at the $5 level. I was just rushing through them too fast. And if I do that, the quality of what I'm doing isn't as strong as it could be and it has been in the past from my experience. So I think it's fair to charge more and the demand. I was starting to be on live streams for 3 hours and I can't do that consistently. So we have to raise the price. And I've kept it $5 for years since I really started my channel back in 22 when I started doing these live streams. So it's it's been a long time. So unfortunately, it's just the right decision, but I don't expect to keep raising things, but it's just practically I have to do it. And it preserves the quality of the analysis, which is, I think, the most important thing. All right. So anyway, real quick before I jump into the charts, my website, guys, if you're new to my webpage, you can go to EWSage.com. Here it is, right there. Okay. It talks about my system, who I am. It has success stories, and you can go on my X. I always, a lot of people are happy with what we do here. I've added a new section for those that don't know, market intelligence. Market intelligence is my blog, and you can find articles I try to put out each day, similar to what I just talk through, just a written form. And then I also will have a section where I put stock information. Like if you come back here, drone stocks look like they're ready to break out. I think that was pretty good news. I mean, that worked out because I think after I posted that, UMAC went up 20%, maybe even more. So I think that was so far a good call on that one. So you'll find information here in this landing page under market intelligence. And as I build out the website. Also, a new change we've made, our pro group now will have Palantir and Robinhood. So if you subscribe to pro group for $20 a month, I will now cover Palantir and Robinhood every day for the foreseeable future, like I have done the big cap tech. Because let's just face it, they are our new big cap tech, and they're not going away anytime soon. AMC is coming off. It's in a death spiral. There's no point of covering a symbol it's just in free fall and no one can make any money on it. So, so we're moving away from the AMC, but add in Palantir and Robinhood. Okay. And then we have this market research on demand. So $50. It's more in depth and fundamental view. You get a macro view analysis of your stock, like you would get from any market analysis that you would pay hundreds and hundreds of dollars, even thousands. I will give you that, and people who have already bought it on this live stream can probably tell you they're very pleased with what I've provided, and a video that's usually focused on 15 minutes, typically in depth on your specific instrument, and we talk about that. So you get that. So I have a couple services. If you're interested, you just click this, pay, and I get back to you in 24 to 48 hours. So that's what I have. You can go to my landing page, and again, about me, my background. You're not following someone that doesn't know anything about the markets, right? Sometimes these influencers out there, you may know more about finance than they do. Who knows what their educational background is, right? Who knows what they've done in their life? We follow these people that are like, buy this, sell this, but they may not have an educational background even as strong as you do. Like, who knows? You don't know. I put my credentials out there. You can see, you can go look. And if you search enough, you'll find out who I am. I'm not hiding it. But a lot of influencers online, they hide behind a mask. And there's no reason. I'm proud of what I've done, and I'm here to help you guys and use my background to help you. So that's what we have here, guys. Let's go into your charts and go into your questions. So just a high level overview of the market, just to kind of give us where we see things. So we're looking at a push down, and right now it looks like you have an SPY 3 waves down and this kind of triangle. I think that's what we landed on, an A, B, C, D, E, and then another 3 waves down for wide. And now we're bouncing in 2. 2 could be over, but it could also whipsaw back up. So it could be very tricky this week. It could do something like this and come back up. It can even come back up to 690. This would be a lot of happy talk propaganda. Who knows what would cause this? Dovish Fed. I mean, but it is a valid path. Okay. Now there's another path that's also on the internet where we come back to 652 and tag it. It almost seems too simplistic, too easy, too obvious to even, work out because I think everyone's looking for this, where you tag this support here, and then we bounce, and we make a right shoulder, okay, and then we go down. And I think everybody is like, most people I follow on the internet or I listen to think this is the path. And they're so confident in the way they talk about it. That's what worries me. There is no talk that this could fail. There is no conversation, out there that I could find that says, no, this could actually not bounce here. So be very careful buying. If you're going to buy this pattern, this is be a chart pattern buy, you're going to buy the pattern. It may not work, because if you look at this count that I have, you would be into the teeth of a wave 3, and we would just project a simple target down of 638, 632, well below the support level. So I'm not saying you may not find like a little bit of buying here, but I would just be careful. So there is 2 paths I see: the path I show here on the index, and then this other path that looks like this, and can come down just a little bit like that. Maybe it can do that, right? And then it can do that. So maybe it can do that, right? But I'd still be careful. I would still be careful speculating, because to me, this is like a scratch off lottery ticket buy if you're going to buy here. I don't think you have as much of an advantage as you think you do. But yes, can it rally from here? Can I make a count work? Yes, and yes. And that's where we are. And of course, our members are still short from this box. So we don't really care what happens here, right? Because we don't care. Because look where we are. We're just like, whatever. Okay, whatever. We'll be waiting. So it doesn't matter, because again, we try to buy these cycles early. We don't play around in this, like, I call it this knife fight with day trader knife fight here. But a lot of people will play around in this, and this will be very tempting. This 652 level will be very tempting for traders to buy it. And we'll see if that's the right knee-jerk reaction. Just to show you another index, we have the triple Qs with this somewhat of like a double top here with another neckline support that may break. And if we do breach this level, right, it seems like we would drop further, right? We have a lot of distance to go. We have a lot of overhead supply. So this would generate a move to 567, somewhere around there. That should push the SPY below 652, because they kind of trade together. So logically, it doesn't make sense. If this pattern would break, you would get a bigger push down, and then you say, no, but the SPY is going to find a bid right here. That's almost contradictory. The only way that would work is if this were to be a false breakdown, and then it would, come back up. They would they would pump it back up. How do they pump it back up? Well, they'll have to do it through AI, through NVIDIA and all these other stocks and the big cap tech. The problem is we saw big cap tech starting to break down on Friday, technical breakdowns, but we haven't seen AI break down yet into any degree. Okay, so that is the thing. We have SanDisk and Micron trying to make a final higher high. They haven't yet. So there is possibility for this path higher still. So I'd just still be very careful trading in this middle area with this erratic price action and wait for your boxes. We're seeing crypto get in a bid here. But I think, again, this is kind of like a bearish consolidation. And as long as we're below this level of 74,000, this could rub full at any moment with the market. You do see it's not taking this peak out. Now, if we can come and either take out this peak or take out this price, that would produce a bigger double correction higher. And we could test the top of the box, this trend line, around 79,000, maybe even 80,000. And then we would want to look at the whole structure when that happens to see if this level, their target, needs to go lower. Because what it did is trapped a whole new set of buyers. Why are we still bearish? Why can't we call the low on Bitcoin? Because we're still in the downtrend based on my system. I can just draw a simple line from the peak here, and you can see we're still below. We're still in a bear market on the weekly cycle. And we can go look to the monthly cycle here and see the same thing, right? We can just kind of draw this line and see we're still below the level, right? We're in a bear market. We got to cross over, right? Look what happened when we crossed over back here, right? If we go back in time, when we crossed over, where did we cross over? We crossed over right around December 22. Where was that? That was the exact low. That was the low. You didn't even have to do a chart. You didn't have to trade charts. You just had to follow this. And as soon as you crossed over, just buy Bitcoin. I think the same thing will happen again, but look how far away you are from this. So it either has to trade sideways until, the end of the calendar year, or it's going to have more downside and eventually come out. So one or the other is going to happen. So it's still not safe to buy it on a higher time frame. Okay, it's unfortunate, but that's the situation we're in. So Bitcoin's still in a bear market, okay, on the weekly and monthly cycle. So, and that's just the reality of it. So we expect it to go low. Looking across the market, oil's obviously been pretty popular. So oil right now, it does show 5 up from this swing low and made a higher high here. Not to say that it could come back and do something like this, right? And this could pump the markets a little bit, get something like that. But once we take out Monday's high here at 120, you're going to get a psychological freak out mode. You're going to get people freaking out. It's going to create a massive set of a new element of fear. Is that where we're going? That's where we're heading. How do we get there? It could be erratic, but I still think it's going to keep grinding higher. Silver breaking down tonight. We had the silver short for members playing out nicely. Could continue to sell off, and that was the right call. And it looks like whoever decided that is happy tonight. Okay, decided to take that trade. Just looking across the rest of the market, not much else activity that I can see right now, guys. So let's go into your questions and take a look at what we have tonight. So start with this first one I got was on Nphase. So Nphase, there was a question of, is it bottomed? Well, we do know this 3-wave cycle's over with this bounce. Okay, clearly the cycle's over. See, the cycle's over. Okay. That cycle's over. So we're in a new cycle higher. But the question is it a corrective wave or is it the low, right? So we need to look at this structure. The way this finished, this looks corrective, just looking at it, because typically an impulse doesn't kind of end like that. Okay. You see that we didn't erase any divergence here. So it's just a corrective bounce in 3 waves. And you've already ended it. So there's two paths. It's a corrective bounce, and it could go higher. Of course, it can go higher like that. It could even be a lead-in diagonal, do this, and come back down. Or the worst case, it corrected the cycle like it did in Novo, and we head to new lows. right? And we head to new lows. So this is called the middle area, and we don't overthink it. We don't trade it. That's why I wouldn't recommend buying it. Now, if you're a bull, there is hope because you see it looks like 3 waves down, no divergence. You're ending the cycle. So if you're a bull, you're going to label it like this. You're going to say 1, 2, but it's going to have to hold 38.42. If it can't hold that, it's going to come back down to these lows, and it's corrective. So it's going to be, really erratic chart, because then it could turn into an A, a B, and a C. It could go to new lows. We don't trade it. So there's really not much more I can say on it. I think the question was it 5 waves? Well, we don't call it 5 because of the way we've topped. No divergence, explosion higher. That's a 3. You never got a 5. That could have been the 5 right there, but it failed. So that means sellers are still in control of this. HPK. So the question here on HPK is high peak energy, technically a huge triangle in the daily time frame with bullish divergence about to break out. Yeah, that's what I see here. So I do see that, but I don't know if it's in 5 or something else. Let's look at this triangle we're referring to. So again, it looks like to me, it's kind of looking at this, a 1, 2, 3, 4, 5. So you put 1 there and an A, B, and a flat. Or maybe we would want to put it, just kind of looking at this closely here. Yeah, I think we'll put the 2 here again, and we'll just kind of try to label this the best we can here. But you see how these overlap? That's not good. That usually you can't put 3 like that, because you don't want the waves should not overlap this much. Okay. We also see this whole cycle reset here. So the only thing I can think of is this is a 3-wave move higher. Let's take a look here. Let's go to the 4-hour. Yeah, the 4-hour, you probably put it right on that wick, and it's moving in 3 waves. 1, 2. Well, you know what? I'll give it to the benefit of the doubt, but that's going to be the shortest wave, so that's not going to work for us. So you're back to what I had, A, B, C. So we're back to this. A, B, C. There's really no other way to label that. And then here you have a lot of overlap in waves. So that's probably 1, 2, 3, 4, 5. And see, you still overlap. Now, you see, you can't overlap like this. That's the problem. They're not extending. And so, more than likely, that would be 3. That would be 4. And then we would probably put 5 here, and now we're in some kind of correction. Let's see here. Let's go to the 4-hour. Yeah, I mean, you took the divergence out just a little bit. So maybe we can make this a 1, 2, 1, 2 right here. And then that little bit right there is a correction. So we'll have 1, 2, 3, 4, 5, and then this is another. So then what we have here, it's either an ABC, a corrective move. And so we can go to the 4-hour and see, probably not, because of the way that topped. So we'll probably call this a 1, 2, 1, 2 count for now. So your question is it ready to explode higher? I think so, but I don't think it's the count that you may have suggested. I think this is the count I would go with right now. A 1, 2, 1, 2. And as long as you're above 528, can do what you said, explode out. All right, CTVA. Let's look at this one. Let's see the question behind it. CTVA and DEER, and then we'll get to Indo, UMAC, and the others. So CTVA, Cortiva. All right, so let's get rid of this. So Cortiva, pretty simple chart. 5 up. And then it made like a 1. See this pattern that's typically, yeah, there's your 5, there's your correction. And then it came back up and it went deeper. Let's go to the monthly and see it still came back down. So that tells me this could be a running flat here. Or it's moving in 3 waves. We're going to probably do it because this is a 1, 2, 3, 4, 5. This would be an A, B, C. And then you took out pretty much everything here, but the weekly you did not. So something like that. So obviously it's going into wave 3, right? I took a run-in flat to do it. And now it's coming out. So it's very, very bullish. All right. And that may be your first impulse right there. Finishing up. Put that there. All right. Pretty straightforward. So yeah. So that's your first impulse. Now, we would expect a bigger extension. So this is probably going to become a 1, 2 as well. And it should just continue to extend, right? It should just continue to extend, right? And you could just keep pushing it higher and higher. What do these guys do? What is this? This sounds like one of these ag companies. I don't remember what they do, actually. Yeah, seed and crop. No wonder it's ag. Ag is where you want to be, okay? So this is telling you that. All right, it's not pretty, but you get the idea. Higher. Deer. So Deer is an interesting chart. I looked at this earlier. So on the higher time frame, I'm labeling it as a 1, 2, and then 5 up for another 1, 2. So a 1, 2, 1, 2, and then I have a 1, 2, 1, 2, and another 1, 2. And you see how it's going parabolic? Look, it tagged, and it's about to tag a box again at 505. So it seems like it's trying to go parabolic. And why is it doing that? Well, ag's in play. But why are we so bullish on it? Because you see the peak RSI on the monthly is back here. Usually the peak is in the wave 3. That means we haven't seen the wave 3. See how it's accelerated momentum? This is likely to push all the way up. So this is one where you want to find opportunity to buy the dip, right? I know everyone wants to buy NVIDIA on the dip. No one wants to buy this on the dip, but apparently you do because you're asking me about it. But this is one you want to buy on the dip. This is so this pullback finished 5 waves up, and it's a shallow connector. So it's either going to crash back down to 506, 446 stop, or it's going to make 5 waves down, right? 5 waves down, rally, and come down again. So I don't know. We don't know yet. But we'll see what it does Monday. But it is kind of interesting. We tagged this parabolic line right where the box is, right where all this support is. So it's got this confluence at 506. And then it may respond, which we hope for, this more vertical move. And it does have a personality of going vertical when it is in vogue, right? When this is in vogue. So I do think Deer looks okay as of now. There is a bearish way. Classic Elliott wave theory would label it differently, right? I would go 1, 2, 3, 4, 1, 2, 3, 4, 5. And you would go 1, 2, 3, 4, 5 of 5. Oh my gosh, it's going to crash back down to 240. But because we look at it from a different point of view through our side, we're more bullish on it and we're not afraid to buy this pullback. Now, if it does breach this level, then of course the bearish view will prevail and then it will collapse. Okay. All right. The next question that we have is Indo, UMAC. What's the realistic target for Indo? And then TPEC, which didn't come up on Training View. So you're going to have to check that out again. And I'll check it out one more time. But Indo, the realistic target, unfortunately, is tough to say because it's a very illiquid and it has a personality of going extremely high once it breaks out. I mean, once it finishes this consolidation, right? You could see how it broke out and went to 80. I already know it went to 80. I mean, I don't know. Once you break out of this congested area, this is congested area, just in general, like this general area, there's no chart resistance really at all. I mean, I don't know I guess one realistic target is we could look at it from this point of view, but see, it's already hit that. I'm trying to think of a way to help you target. Maybe there's a little bit of resistance right around 18, right around here, $19. So maybe target that 18 or 19, as long as the structure holds up. And it's holding up so far. It's holding up so far, right? Everyone wants it to happen tomorrow, but it doesn't. That's not how the market works. Unfortunately, the market tests your conviction and patience as a trader. It does. And chances are you'll give up on it before it, and then it will move after you sell it. That's how it works. Good example of that is this stock HP. This is a good example. HP's trading at $35, but it's well known to our members because we bought it at the lows. And unfortunately, a lot of people probably aren't in the trade because look what it did. You see how it had to test your conviction? Look, it stayed in this box from June to August. And you see, if you wanted instant gratification, you just didn't get it. But you had to wait. And you had to wait. And you had to wait. And then by waiting, look at the reward. Look, it just keeps going up. It doesn't stop. So my point is, a lot of traders don't have the patience. They want instant riches. They want to be in a casino. They want to they want to get paid. Unfortunately, the market only rewards people who are patient. And that's the way it goes. And there's so many examples of this in our group, but this is where we buy. So Indo is like that. Indo is like that. Everyone's asking about Indo, but the problem is you're going to have to be patient and let this play out. And if you don't have the patience, then you're not going to be able to get the reward. It's that simple. UMAC is another one. It's done the same thing. We can have the same conversation with patience. Talk about the people who bought it here in April. This was a box I gave when I first started this membership service. I mean, imagine waiting and waiting and waiting and waiting, and now finally it's coming out. So UMAC, we like to see a 5, but UMAC has two paths. The likely path, and then the berserk mode path, where we just go vertical. Okay, so which one are we going to get? It loves to kind of just break out. So I wouldn't be surprised if it just goes right up to our target. But we need to recognize a lot of times stocks, when they hit these all-time highs, pull back. They make a pop and handle. So that's what you could do. And you're like, well, my calls. Oh, how can I time my calls? Well, you can't. That's why I don't recommend buying calls. I recommend trading the common stock. Because you can't, I don't know how it's going to play out. I don't know how it's going to play out. But I do believe it's going higher. I do believe it's going to hit this pink box at some point. I can't tell you when. I wish I knew, or I would go buy calls. I would. I don't know. I think this is the most likely path, what you're seeing here. You're going to come back up. It's going to probably make either another 1, 2, or you're going to finish this whole impulse and then you're going to correct and come back out. That's the most likely path. But am I dumb enough to time the market? Oh, I'll just time it. No, I'm just going to stay long because we bought it so soon, right? We bought it so soon. We don't have to worry about this. We don't have to worry about time in the market and all this. So I think for right now, the likely path is what I showed here, but I can't rule out it just goes vertical because it has a fractal that does that. Look at this move. You would have thought when it came up to the all-time highs here at 549, it would have pulled back. It didn't, it just went vertical. And then you do the same thing again. So I think the fractal tells you not to be super bearish or scared here because it tends to do that. But then when this is tagged, I think the pump's over for a long time. And that's it. Okay, and then this TPEC, I don't think anything came up when I did it. So it's either the wrong symbol or I can't do it. All right, EOSC. Let's go to the next one. Here, EOSC. Okay, so this one was tricky. I had to update this because the way we've corrected. Let me go back and let's orient itself to the chart. So we have what I have here. Let's go to the higher time frame. We have 5 waves down, which implies we need a 3-wave bounce. Well, we did get that here, but we made another high here after a pullback that corrected this cycle, the third leg. So the thing is, it looked like 5 waves up. It looked like 5 waves up, and it could have been labeled 5 waves up. That means we should make another high because you can't correct in 5. You have to correct in 3. But now that the pullback went so deep like it did, it's actually a bigger corrective move. However, I still think it comes back and takes these highs out when it's finished. So it's morphed into something like this. So I think we have a W here, an ABC for another W, an ABC for X, and then you have to come down in Y, and then you need another 3. You have another connector here, and then you have another 3, and it has to play out this 5-wave move, and then it's finally over. Finally over. So looks like we're about to go into the final flush down. So on the daily cycle, we've already pretty much erased divergence. So it's definitely oversold enough. It's got the right feel for capitulation. Okay, so it's got all this, and I tried to draw a trend line through the majority of like where this resistance is, and it ironically comes right up to where it's probably looks like it's trying to head to. Like $4, $4, $3. It seems like, wow, what a crash. But believe it or not, that's where I think I remember buying it. So it was only $4 like 6 months ago. So that's how overpumped it was. So it seems like it actually didn't really, it just got rid of all the froth is all it did. All the froth is gone. So now, but I do think because of how we topped here, I do think there's a Y. There's a Y. So I don't know exactly when, but I think somewhere around here is probably the likely spot. And it could always do a lot of things afterward, but I do think at some point in the future, it'll be over these levels. Okay, the next question is PBR. So PBR, higher time frame. Looks like we have a big 1, 2, corrected in 3 waves, 5 waves up, corrected in 3. We made another 5 up, corrected down here. This is when we started watching it. And then did my line moved on me? These lines moved, but it had a kind of like a bull flag here, and then it broke out of it. And of course, it's been vertical. Right now, the count that I'm showing is it's in a 5. So what do we know? We know emerging market EEM is in a correction. That's going to probably hurt Brazil and zone. Emerging markets is in a correction. We know the dollar's strengthening. That's going to hurt Brazil. But oil is going higher, right? Because of the war in Iran. So you got this conflicting situation, but it does look like a 5 to me. Okay. it looks like it's about to roll over and correct. So we have to ignore the news of the war and all that, but it looks like we're going to have a pullback. But this pullback is definitely buyable. And maybe your last chance to buy this thing before it really breaks out in a multi-year bull market. So this is it. It may come back down to 1481. There's your wave fours. You lose your 5. So I'm looking for a correction. Now, it says, oh, logically, that shouldn't, why? It should be pumping with oil, but it's not. You can see the chart for yourself. It's the bearish divergence. We have 5 waves up. We have emerging markets pulling back, the ETF. We have the dollar strengthening. So for some reason, it's not. So it's not. I don't know. Maybe it's already priced in. Maybe too many people piled in it. I don't know why. Maybe they don't benefit from the war as much as we thought. Who knows why? But the point is, this is what we have on PPR. But we like to buy this too when it happens. It hasn't happened yet, though. Okay, the next one is Norwegian Cruise Lines, Arbor Reality. Okay. Norwegian Cruise Lines. Problem with these transports is the DJT looks like crap. The Dow Jones Transport Index transports, I mean, it's no shocker that transportation's all screwed up right now. I mean, look at the airlines. The airlines are a total mess. I mean, I'm seeing lines going outside. I mean, transportation's a mess. You've got the shipping issues. You've got all sorts of crap, the high fuel cost, so the DJT is a mess. I mean, when I look at Norwegian Cruise Lines, it looks like 3 down. This looks like a triangle. We actually had a short area here. It looks like a triangle. It looks like it's about to give up the ghost. I mean, like, it looks like it's about to tank, but I can't say for sure, but it looks like I would be watching this triangle, and wherever it breaks out, you're going to have a huge move. But it looks like it's ready to break down. This looks like a continuation pattern lower for another 3 waves. I would not be buying this thing. I mean, for me, it would be short, stop at 29.28. I mean, it's that simple because I look at the DJT, I look at all the sector in general, and like Carnival and everything. Like, how can you think this would go higher? I just can't think. So this is logical. And look, it's at the right point in this cycle. So to me, this one's could have a pretty big sell-off coming. Similar to this. Look at this, what happened here on this triangle. All right? This like freaking went straight down. It could do the same thing. Straight down. The problem you have here is you're going to need a bounce and another, like, see how this went 1, 2, 3. You're going to need 1, 2, 3. You just can't go down. So if it goes down, it's got to bounce for a while, and then it has to go down again. Then you can buy it. So this is in a lot of trouble. So yeah, I think that cruise line is sinking. It's going down, sinking. All right, ABR, Arbor Realty. So the problem with REITs is they hate high interest rates going higher on the long end kill REITs. And that's what's happening here, right? So interest rates, don't, and in general, REITs are been in a bear market for a while, right? Since 22. A 1, 2, I don't have it labeled, but then another 1, 2. You see how we made this high and V? I think that's good. That means at some point it will recover, but it's got to finish this wave down. It looks like, I'm being generous labeling this a 3 here. This could be another 1, 2. And then if this is another 1, 2, then you're going to be testing the lower bounds of this. But this is kind of the path. So I expect more downside as long as you're on the left side of this downtrend line. The REITs in IYR in that sector it's not their time yet, but their time is coming. It's just not yet. See, it's in a bear market. So it's just not time for the REITs to do their thing. But believe me, they're going to do their thing. They're going to come back. It's still not done. Now, if we break this low, then we would have a big 1, 2, 3 rate move down. instead of this being an ABC, we would just have to call this A, B, C and call it W, like an X. So it'd be more like a WXY. And then, well, I mean, so, but the point is it goes going lower is what I see. Okay, and then I think you said TPAT. Yeah, I'll do the TPAT real quick to close this one out. TPAT is another one that it's kind of speculative, like Indo. High risk, high reward. So this is a chart we're going with right now. We looked at this a long time ago, calling for the sea leg. No idea about the war, but now we have it. So for me, it looked like we had 5 waves up here on 1. We pulled back in 3. We're moving in 3 waves. So I'm trying to say it's like a C wave. So we need 5, but subdivided into 3s. Okay. Like an ended diagonal. So it's got 1, 2, 3. So we need 1, 2, 3. So we need, it needs to do something like this. The problem is it's spending a little too much time in this area, right? Because if it spends too much time, then we have to look at this as like 1, 2, 3, and then this is a bigger connector wave. And then that could mean it could do so many things and it's tough. Then you're just basically gambling. So this is a very tight setup. It's basically you're long as you're above 134. Once you break 134, it's going to be then you're just might as well, again, it's a scratch off ticket type play. But I think it's going higher? Yes. How it works into it? No idea. But this count allows us to define our risk better than just buying it randomly. So I've tried to it's a very aggressive trade idea. And as you can see, it's right on the edge of not working. So, but it can. Let's just see how it's kind of coming into the apex, right? We're coming to a move, right? It's going to move one way or the other, right? It's going to need break out of this or down. And wherever it goes, I'm playing the bet where it's going to go higher. Okay. We also seen at times these things can get really erratic, but if it does break this low, we would have to label this as 3, a W, and then some kind of A, B, C, and then out. Okay, so then Baxter has been really beat up. I mean, that poor Baxter. Whoa. What happened to this company, this great company? Well, the good thing is it's almost over. So we look at our count. We're in this 5th wave, and we're in an end and diagonal, and it looks like we're in the last push down. Let's see. Technically, it would be perfect to have it tagged $14, but remember, HIMS was a little short, so they may front run it. It looks like a 1, 2, 3, 4, one more low. So it may need just one more low. It may only need to get to, I don't know, 16. But it looks like it's coming, this correction's almost over. Let's look at the RSI. It's just been brutal. Let's go to the month. We have to go to the monthly. You see how it's kind of already it's already showing signs that the correction's over. You see how it's kind of already bouncing here. Let's see if we can draw this. See, it's about to come out. See, the bears are losing control. See, the bears are losing control because there's no more sellers left, more than likely. So I do think it's going to come out of this. Okay. And it does show 5 up, but we know there's no guarantee for wave 3 on a grand supercycle correction. I mean, good Lord, it just straight down. I mean, what the heck happened? Someone needs to order that deep dive report. I'm really curious to do a deep dive report on these guys. Like, how did this, they need to do like an MBA case study. I mean, and what not to do. I don't know, whatever happened. I don't know what happened here, but, so we want to see this divergence. So you actually, because this is such a big impulse, look, it's 5 ways down, all the way down, right, from the bottom, right? So you don't want to see divergence erase. If you see that, then it's probably going even lower. So you may want it to go a little lower, but it can't accelerate lower down. It can't, no more erase and divergence, right? It's got to keep this bullish divergence going. And then it would rebound. And again, the only thing it could do, because it's 5 waves down, is it could rebound and go lower, or it's a flat up here. And you see there's so many wicks, it's probably a flat up in here. So that's why we would call it a major cycle low, right? See, it's probably like a flat, right, off of this peak right here. Yeah, it's probably some kind of flat here. I still have it drawn perfectly, right? It's probably some kind of flat. A, B, C, something like that. Maybe like that. Put that one there. There. So you see, it's probably like A, B, C. And then that's it. Pfizer is morphed into something just a little different. So Pfizer, we're seeing a pullback, and we're seeing this entire cycle end with divergence. So we're going to label it as 5 waves up as a lead-in diagonal. And we're going to make that 1, and we're going to correct probably back down to 2371 and then continue higher for the time being. Can I put C done? Technically, yes. It could be a running flat. So I think this is unusual. This is very uncommon and very bearish. So it's more likely we would extend more before it could maybe come to another peak like I have shown. So I do think this is viable. And I also think this makes sense. It won't continue higher, right? It won't be like a 1-2-1-2 or anything like that, because the XLV looks like it's ready for a bigger correction. Okay. The XLV looks like it's in a bigger correction. XLV. And if the XLV is in a bigger correction, this is going to go down what the XLV is, should. So I think you've got to expect more downside, and we're seeing it break down. Look, the daily cycle is just rolled over, right? See that? It just rolled over. It just started a correction. There's no reason to hope for anything other than more downside. But it's so early, there's no way to know where the target is. I mean, it can come all the way back down to 21. We don't know, but it's correct. It's in a correction. And it looks like 5 up. And I did check the 3 isn't the shortest. All right, the next instrument is BLME. Didn't break, but just touched the low. B line. Let's clean that up a little bit so we can see it. Okay. So B line, we're showing this optimistic view. You did not break the low. Okay, so let's take a look at this. Let's take a look at this. So we have what looks like 3 down and 3 up. So we would start labeling this as an end in diagonal in 5, right? That's what we have to start to label it as. So we would just start doing that, right? We would have to start doing that. 1, 2, 3, 1, 2, 1, 2, 3, 4, 5. So if this is the case, you have 3, and then now this could be a connector, and then A, B, C, D, E, and then come up, and so you just need 3 waves. So we need another push higher, and then a 4, and then a 5. So I would look for that as long as the structure holds, and that's what I would look for. Then of course a correction. Once this is done, then it corrects, right? It comes all the way back down again. And then maybe then you can get your big move out. So we'll need to be watching it. It's really early still, but it does look like, let's go to the higher time frames. You see how it kind of elbowed up there a little bit? Let's look at the monthly. Yeah, you see the monthly cycle? It looks like, see, it's trying to pull it into a bull market. And it looks like to me from that peak, once we take out this high, that should push you into the next cycle. So I do think it's the momentum is trying to take it higher. Okay. J&J, BAC, and Cisco long-term forecast. All right, J&J, the long-term forecast has been pretty nice on this. We still expect, look at all the up, look, these waves aren't even finished yet. I mean, let's, let me get rid of some of this here. Okay. So right now we're looking at, this is the 3 of 3. All right. So we broke out, we hit 3 of 3, we pull back and forth. Now 4 can go, we can make another swing down to 228, 224 and bounce. And we would still go higher. The problem is trying to guess the top because you can't. Because we've seen these before where you get 5 and then it accelerates even more. And then this becomes another 1 too. So what I'm showing now for targets is is like conservative, but it could go for years and years like it did, early in its life, right? Early in its life. Look at that. Your grandfather made them millionaires. There's no reason to think this can go on for years and years the same way. So I would just be looking to get on the trend. I can't tell you the target is, the target is in your blue sky territory. You're in blue sky territory. I mean, I guess we could try to conservatively project one from this extension. That would be a wave 3 top on the super cycle degree at 375. And then you would correct back down, maybe to the 618. And then you would come back up from 286. Again, rough speaking, 430. So maybe 420, 420. So that's a target. Let me say 400. So that would be a safe target, just a nice, comfortable target that maybe in a year or two we hit. But would it surprise me if it keeps going higher? No. Okay, why is it doing that? I don't know. I don't know their products well enough. I just know they got rid of all the liability, right, that they had with their company. They settled these cases. They sold off poor performing assets. They're well managed. They're well run. Unlike Baxter, like we just saw, this is the opposite of Baxter. This is a company that's well run. And that's what they did back here. Look, that's what they were doing. See, their stock here didn't do what Baxter did. Somehow, their executive team got through their crisis. And so this is a case study for success. We had a case study, NBA case study for disaster with Baxter, and this is a case study for success. And this should just can keep going. So if I was a long-term investor, I'd be looking like, how can I get long this at a reasonable price? Here, and then you're making an opportunity. There it is, right there. So, all right, BAC, that he's got more. This is, financials are dangerous. Okay, and I need to just double check my chart because it's been a while since I've updated this chart, but I think it's pretty accurate. So we have a 1-2 here on super cycle, and then we have another one here, cycle. So it looks like to me, and I guess I need to, again, it's so we can see it. So you have 1, 2, I'll get rid of this, 3, 4, and 5. See that extended fifth wave here? Let me see. This makes sense. Hold on. Yeah, you can't have that. So my 5 is off. So we'll put that there, and there, and there. So it's like in a flat. Okay. Like I said, I hadn't updated this chart in a while. It's been a long time. So something like this is what I'm thinking. Let's confirm it. Let's go to the monthly cycle. So we don't see any divergence there. We see the 3, the peak in 3 here. We see the bearish divergence. We see the big correction. So what I expect to see happen is this line is going to come all the way down. We're going to probably break that. We're already started. Like, that financials has been in a lot of trouble. The weekly cycle, that's a sharp turn down. Still not much. You have to really watch the monthly to get the confirmation. So I think once you see this line, once this line breaks, then the flat is in play. I think it's going to flat based on everything I've seen in financials. And I think that would get you back down to somewhere around 1785. The financials are in a lot of trouble, guys. I don't know our elite members have been very bearish financials. We've had multiple, watching Nphase, and we pretty much called the peak on JP Morgan exactly. We haven't talked much about BAC. I guess the good thing is you see how you made this higher high. It means eventually you'll come out of this. So eventually financials will be okay in the future, but I think they got some pain coming, some pain. Okay. So that's what we're looking at. Looking at a big correction and a flat. Cisco also showing signs of a 1-2, and we finished this big 1, 2, 3, 4, 5 up, and we have this in a flat as of now, but it's too early to tell. So I'm worried that it's going to ruffle with the AI trade soon, and then it comes back down and this corrects. Let's look at the higher time frames. I haven't looked at the higher time frames yet. So nothing on the weekly. Let's go to the monthly cycle. So it's still, still bullish on the monthly, but you do have bearish divergence. So it is a 5. So then to invalidate this chart, you need to come back and take out 8862. If it can't do that, it's likely to have a meltdown, probably with the rest of the AI sector soon. But how soon is tough to say. I would be looking for 5 waves down. It could go as low as, it could come back. We don't know how low it's going to go, but it will be a rug pull. It's a flat, so it's a crash, right? And you would be correcting this whole thing. This whole cycle would need to correct. It could, worst case, come back to 37.49. And this would be a cup and a handle. And of course, on the higher time frame, we like it. So I'm saying we don't have evidence it's topped yet. We don't have evidence for most of the AI sector, but I anticipate it's very close. If not, it has already. So I guess I shouldn't label it. I can leave it unlabeled, but it looks to me in a very dangerous setup. And I would be very attentive to the chart. Okay. The monthly cycle is overbought. It needs to correct. See, this needs to correct. And you came into resistance and it got pushed back. This is common. This what usually happens. That's what usually happens. But like I said, if you can take this high out, you invalidate it, and then this becomes this more bullish 1, 2, 1, 2, and of course 1, 2. So once you take this high out, you may get a candle, you may get something like this, a real blow off top. And then we may be in 3 at that point. Okay, so long-term forecast, I wouldn't be surprised to see this at 140, 148 in the future, but we're talking years from now. The short term, if this is your long term, I'm going to be expecting a big pullback in the next couple of years. Okay. Then next set of questions is PRSO. Nice go to zero stock. And again, we just trade these from the lows. Because there's no point of updating it. So right away, you kind of see an inverse head and shoulders trying to form here, right? That's what it looks like. And from this low, we only made 3 up. has some divergence. So this is likely interesting. We took the momentum out, but the price was lower. That's usually a sign that we're going to follow through higher. So I think how we bottomed. I just what I think we're going to do here. Okay. Again, I never trade stocks like this because when you see what I think is going to happen, you're like, why would anyone want to trade that? But again, people, I'm going to answer the question. I think what you're going to have here is something like that. I think you're going to have something like this. Okay. I think it's going to go a little higher. I wouldn't be surprised if it takes this high out and then it rug pulls again. And then it takes this low out and then it can break out. That's what I think. But this is the middle area. I think the momentum is showing me that it's likely not to pull back right now. It's likely to continue higher, take this peak out. But because of the way we bottomed here, I can't call this a flat because it's only in 3 waves. So I think it's going to come back and rug pull again and then bottom and go. MOBX, we talked about this needing to hold 60 and back testing 60 cents in that area. That's about where we came back to. So now we need to see what this structure looks like. So this is in 5 waves. It could be in a flat here. So there's a couple ways I can label this. I can label it like this now. Something like that. And I think that's probably what we would go with. And then we make that final leg higher. So I think something like that is probably in play. It looks like, see, it's about to end the correction on the 45. It hasn't yet. It's about to. See, it's probably already did. So one likely is probably about to finish. So this is the idea. So once you get this bounce, then you can trade it long against wherever this low is, 62 cents, and then see if you can get this higher dollar level that we were looking for, somewhere around $2.59, $3, or even higher. But like after that, it may reverse split, dilute, go back to zero. We don't know. But I think the long trade could survive with this higher high here. And I was thinking 60 cents and would come back to back test. And we are seeing bullish divergence and we're seeing it try to turn higher. So I think it's probably going to make an attempt. Okay. It's going to make another attempt here. Okay. So we'll have to wait and see how it goes. All right. NKTX in a deeper pullback. You can kind of see it's still in the same corrective structure from this peak. Looking at the peak here. Let's take a look at what we have. I think I remember, calling this like a flat. Let me see here. A, B, C. So that would be W there. X and then Y. The question is, have you bounced enough here? You're doing that right here. So, just kind of want to look at this one more time. Looks like it's actually making 5 waves down from this peak. So I think we're going to change this a little bit. And it was in the same corrective move down, wave down. So I think we're going to label it like that. And then we're going to label the flat like this. So it looks like And again, I think I was telling members somewhere down around 221 if this low didn't hold here. So I think this is kind of the idea. So we'll see if it can hold and turn. It looks like it's starting to turn up, right? But it hasn't ended the correction yet. But it's going to try to. See, it's going to try to end it. Let's look at the 4-hour cycle. Pretty oversold. Trying to turn up. See, oh, we're so close. Watch that 4-hour. Once you see the 4-hour cross, like we saw here, that should do it. That should do it. Okay. And then that low will become very important. That low would become very, very important. Okay. All right. So now I think we're in some of my new symbols that came in since it started. Yeah. Thanks, Johnny, for emphasizing that. Yeah. Sorry. I know it's a change, and I explained earlier the reasons for it. And it just allows me to take more time. I don't feel rushed. And also it's like I can't be on 3 hours, like I love staying on, but it's like tough to do. Now, one of the things I have thought about doing is doing more live streams instead of once a week. But doing them at a different time, one for Europe and one for more geared to Asia. So like do something early and then do one that's like late, like in the late evening. Sometime in the week after if it's volatile or there's a big news event where people would typically have questions. So I'm trying to think of that and see what I can do there. And that may, help get people more opportunity. Because I think Sunday night works for some people, but I know like sometimes I do a Saturday morning, I get a whole different group of people on. So I want to make sure I can get everyone there. So let's go to Chevron. CVX. Again, these charts aren't labeled up to date, so I have to kind of fix them. But the general idea seemed to work out. Let's go to the monthly cycle. So obviously that's a big one too, right? We don't even need to put much thought into that, right? That's probably your super cycle. And then this is your cycle. Another one too. So it's about to go into 3 of 3, an energy bull market. This chart is telling you energy crisis isn't ending anytime soon, right? Now, it can always do a flat, right? 1, 2. It can always do a flat. So don't get me wrong. It could do this, but still, we're going into. This is a stock for the next. This is a good stock for investment in these energy plays. Now, they all started breaking out, as you know, and trying to break out as a war, but right now only showing 3 up. So you got to be careful chasing because you could chase yourself right into a flat, okay? And if you do, you're going to get rug pulled. Like, what if there is peace in the Middle East and everything goes back to normal? This will rug pull in a flat. If it doesn't, it's obviously it has a reason to continue on with its destiny. Here looks like we have to go to a daily. Kind of interesting with the divergence. This was a flat here. It looks like your 3 and 4 are right there. Like right here, somewhere there. In your 5. Remember, we just looked. So I see a lot of wave 5s in energy. A lot of wave 5s. I don't know why, but that's what we're seeing. Okay, well, a lot of wave 5s. We just saw one with Petrobras. I see some others. You see all that bearish divergence. Let's look at the daily again. The weekly has none. So this can do a couple things. It could just accelerate, erase the divergence. And then it's a 1, 2, 1, 2, boom, it's gone. Or it could top here, correct, and then it's gone. So I think it's tough. I mean, would I be surprised if it's not another 1, 2? No. So it looks like to me, based on the weekly cycle, It seems like to me that it's gonna extend into risk divergence, but the chart doesn't say it just yet. Not yet. It's close to doing that. So you're like, that's why it's better to buy them down here, right? Because it's tough. Because if you buy it here, yes, you could chase it and get a breakout and you're a genius. But if you chase it, it's a fifth wave and then you correct and they rug pull you all the way back down. The good thing is I don't think it's a flat because of this. So I think this is a low. So I think this is the conservative view, but I can't rule out next, Monday, early in the week, we just keep going, explode out. Okay. I think my mic went off. Sorry, guys, about that. I'm not sure. Can you put in the chat? Yeah, sorry, guys. Did you get Chevron? Can someone put in? I don't know when it went out. Yeah, I don't know what happened. We have some bad weather here in Florida, so I'm not sure. Where did we lose it? So I'll go back and cover Chevron again if I need to. Did we hear Chevron or not? I'll just cover Chevron again real quickly. Sorry about that. 1212. Okay, Microsoft. So we heard Chevron. All right, Microsoft. So Microsoft, I have it in a flat, and we are in this 121212, but it seemed like it's too easy for the bears. I think I wouldn't be surprised if we could squeeze and this becomes 1, 2, 3, 4, 5, and we go like A, B, C, and come up to 4A, and then go down. But the daily cycle is showing us it's about to start a new cycle lower. So I would be really careful with that kind of hope in trade, because it may just go down. And I'm thinking somewhere down in this area, and I have it in a 1212 count for more upside. But if you're really bearish, can you guys? I think you guys should be able to hear me now. I'm hopeful. Let me just check everything. Yeah, you guys should be able to hear me now. It's fact, yeah. It's fact. So I know the sound's working now. All right. So, we should be pulling back here, but from Elliott theory, you could say 1, 2, 3, 4, 5. But the problem I have here is the subdivisions in this wave only look like 3 and not 5. And that's why I have a more bullish view on the higher time frame. But remember, there's some bears that believe this is the end of the grand super cycle at Microsoft. Okay, just be careful. But I don't know if it is or isn't yet. I think this wave looks like 3 to me. But regardless, I see it going lower, maybe down to 267, 240, somewhere in this area. And as of now, it can turn down at any moment. But my gut instinct as a trader says this is too easy. That they're gonna maybe drop it a little bit and then they're gonna squeeze it up. It just seems like that's what they would do, but I don't know. That it's just that the count does not support that right now, though. But my gut says be careful getting all beard up here at 401, right? But it is what it is. The better opportunity to short would have been up here, but it's come. Now it's tough. It's tough to short that. Yeah, it's fine. I'm sorry about the mic. It's like I said, we're having some bad weather here and stuff. So things are glitching out. So now Microsoft is done. All right. So let's take a look. Where did we leave off after Microsoft? Thanks for joining the pro group, Takeover 52. I think you'll be happy with what we've been doing. And again, we predicted this big cap tech sell-off. It just took longer than we thought. You can go back and listen to all my videos. The thing about YouTube is these things like every video I've ever done. So you can go back and look. It just took a long time to top. So that is also means there's a lot of trap buyers. Okay, Oxy. I heard that was pumping last week. At least I read about it on TV. I heard about it on TV. All right. So we were looking for more upside. All right. What's going on here? Did we bottom? We do something like that? Maybe. Let's take a look. Yeah, I mean, see, that's close enough. See, you basically erased divergence. So it was just a stop loss rate, a fast little shakeout. They never fully extend it. Now it's coming into a new bull market, just like Chevron. Energy, guys, is where you need to be. You got to have a piece of the action in energy. Okay, now I'm not saying go chase it, but you got to find a way to get in on this because it's still early in the longer cycle, in the super cycle degree. It may not be early in the 4 hour cycle, but you got to find a way to get long energy, or you're going to miss out on some gains in the next several years, I think. Now, right now, it's obviously in some kind of third wave, taking out divergence. In fact, it looks like it just corrected right there. Made another 1-2 right there. Look at that. 1-2. So this is really bullish. Warren Buffett he strikes again, right? Isn't he own a lot of this? Guess he knew what he was doing after all. Because he was loading the boat down here, right? People, I think, thought he was dumb. Guess he wasn't so dumb after all. So it looks good, and yeah, I guess this box down here, were still there. It was the right level. So this stock has a lot of upside. Look at this. It's going to become a 1-2, 1-2. It's just got years and gains ahead of itself. But what this also means, just read what the chart is telling you. Energy is going to be needed in the future. There's going to be demand, and it may be expensive. A windfall for these guys, and hard to come by if the Middle East is closed down under a war that takes longer than people think. Right? It may not just end tomorrow. Okay. Then VSTM, I don't think I'm familiar with that symbol. Let's see if we've charted that before or not. We have not charted that one. Okay, let's look at a monthly. So looks like 3 connector, or maybe 5 down. 1, 2, 3 connector. Yeah, I think we just don't see it. There's supposed to be a shallow dip in here. So, but basically it's 3 down, 3 up, 3 down. And the problem we have is this right here, that it should not. So that's never a good look. Okay. So it's likely not finished going lower. All right. So you've got some kind of 3 waves down from here. And then you're in this downturn. Now, this looks like the first connector in there. So it looks like your first 1 tooth was right there, W. And then you made a bounce here. So yeah, so you probably have something like this. So here you have 3, 3, 3. So it's triangle X. Or wait, then we break that low. No, it can't be. So weekly cycle and the monthly cycle, see how it's peaking out here. So this is going to turn into some kind of flat correction. A, B, C. So the question is C done in a running flat or not? It doesn't look done. But the problem is we could still be in B. So we're in this like middle area. Let's go to the daily cycle and take a look. See, there's no divergence here. It already turned lower. It's in the next leg lower. I don't know. It's tough. Pure Elliott-Wave theory, you put the X there, and then you're in the waterfall sell-off moment. Let's look at the weekly cycle. See, while it's breaking down, it's not, the monthly is what I'd be looking for. So if this monthly cycle breaks this trend line here, then the X is done. And we would have to just put that there. Right? We'd put that there. And then we would label it like this. And then just capitulate and finish. So I think because the monthly, look, this is turning down on the weekly. The monthly is turning down about the break trend, is wide open on the stochastic. And the daily just broke trend, and is wide open to the downside on the stochastic. I think it's going lower. So I think you got this Y coming. And then it can finish the count, the sequence, and then maybe finish the correction. And what you're going to look for is this RSI to come all the way down and take that level out. And then it should be over. So I would expect more downside. What do these guys do? Let's see what these guys do. Biopharmaceutical company. Okay, so it's a biotech play, early stage. So I don't know, maybe something's not going to go right. I don't know, but it makes sense. It's not energy. If this was energy or something, I would take it. No, and actually, look, you're below. You see this support? Look at that. This was support, and then it flipped to resistance, and you backtest rejected. Do you think it's not? You've already been rejected twice. It's definitely, yeah, I think it's ready for downside. Just looking at that. Okay. Reddit is in a deep correction, but kind of got caught up with software memes. We have it as a 5 up, 1, 2, another 5 up. We need another 1, 2. And then in this wave, we have an A, B, C we need to finish, but we need to stay above 83. So this will probably be all about the RSI, not necessarily about the level. Look at that capitulation. But look, it took out everything. That's crazy. That's the day. What that does. Let's go to the weekly cycle. See the weekly cycle? It's taking out this low. That's interesting. Okay, that's interesting. Yeah, that's interesting. Let me see here. So we have 3 down. I wonder if it's just 3 up. I think we're going to have to change the label. We know sometimes stocks move in 3 waves and not 5. And this may be one of them. So this is a movement in A, B, C, a W, an X, and a Y. So what that does is it allows us to breach this level without any being a problem. So I do think it's going to go lower. Okay, unfortunately. Let's get rid of this. We have 3 waves down, 3 waves up. We need 3 waves down. So we just need to follow this C leg to its conclusion, to where it goes. I mean, you can kind of see I don't think it's had wave 3 of C yet. So it seems like more selling's going to come. All right. This could also be, let's take a step back. This could be that we rally and then drop. So I would look for something like that. And X can go anywhere because of the structure, because it's only 3 waves. And we have, from an RSI standpoint, we've taken out all these levels. So this is correct in the whole thing. This just took this out, is correct in the whole thing. And the monthly probably not updated. So Reddit looks like this for now. Some more downside. I can't, it's hard to say where the right level is going to be, but it needs, I think the best thing to do if you really want to buy this is wait for the correction to end. You may not get the exact low, but maybe you'll wait for this, When you get to the other side of this line on the weekly and then the monthly, I don't think we can even gauge. Well, we have a little pivot we can work off of here. So there's a monthly. So when you come to the other side of that, that's when maybe it's time to say, okay, yeah, corrections, the bear market's over. Okay. And then see the MSTR. MSTR is another one like Microsoft. It just seems too easy to short in here. Okay. Now, MicroStrategy had 5 waves up. And of course, we lose the 5. We lose the 5. And we come back down in 5 and we bounce. So this actually could have been the low right there. But we made another swing low. You see, this bounce corrected the whole leg down. And we came down and made another low. The problem I have is the bounce wasn't large in time nor price compared to the decline. So what I was thinking is maybe it's not gonna it's gonna still go lower, but maybe it's gonna do something like this. Maybe I was first thinking maybe it'll do something like this. Then I was thinking, well, maybe we'll do that, but maybe we'll put this 3 over here. Maybe you do this. And come up like that. And then we can use this as a connector and start to short it at 177 and higher. So I think this is because of this Whaley bottom, it's a short. But where is the right level? Not here. Unless you're a casino trader. You want to play your scratch offs. Then you can short it here. Does it may work? Now, this wave 1 is super extended. This is wave 3. And I don't think it is. But if it is, that means this wave 5's got to be just a little bit. But if it's not, let's say that's not wave 3. Let's say that's another 1, 2. Well, then you have a 1, 2, 1, 2. I mean, where's wave 3 going to go? I mean, 50. I mean, you're talking this thing's going to maybe go to, I can't say 0. There's no more room. They're going to run out of room to extend lower. If this was wave 1, God knows what wave 3 is going to look like. Out of business, bankruptcy. You see what I'm saying? So this is a dangerous chart to buy, but I would like to short it. But here, I think it's too easy to short. It seems too easy. The market is never this easy, but maybe it is. Again, maybe too many people are still hopeful, even with a chart as ugly as this. So I think it has 2 possible paths. One, I think, is it can whipsaw back up to here with a short, or it does a bigger whipsaw like that. One or the other. So that's what I think is going to happen. But if it neither happens, then you either have this with a very small low, just another little low. That's it. Or it's gone. It's lights out. And this is a Lehman moment for crypto, for this company. That's all I don't know. So I think the chart, but because it didn't bottom here, you can't be bullish on the chart. It's bearish. It's what can I short? Also, you're below this kind of neckline, slanted neckline. And maybe it will come back up, try to back test it. Maybe it won't hit our bots, try to back. I mean, nothing about this is good. And even if I make the neckline horizontal, let's say I make it horizontal, maybe it'll form a right shoulder. You see, you have this left shoulder. Maybe it'll form a right shoulder. Right? But I think no matter what happens, there's more downside. I do not think that is some major low. I do not think that's a major low. I don't think so. I think it's got more downside. It's what's the path to get there. I think more elegant path and what would be a squeeze and then the move down to this general area, right? That's what I would think and what I've been waiting for, but it just hasn't happened yet. And crypto is running out of time because I think more sellers are going to step up soon. It can't squeeze down. Like it's gotta get going. It's gotta get going. So, all right, CVCO. Another new chart. Go to the monthly. So typically when the peak RSI is way early, and even here is kind of early, usually means we haven't seen the best of it. Now, looking at this, it looks like a 1-2. 1-2 here. It's hard to see it, but I think if I draw this line just right, I mean, we're just on there. Nah, I don't know. Let's go look at it and see where we could maybe put that. So I think we definitely label this 1-2 here on the super cycle. And then this part is going to be tricky because do we have 5 waves here? I don't think so. So I don't know. You look at the monthly again. I wonder if this is an extended fifth wave. You see, I mean, the peak, if this is 3, 4, and then this is an ended diagonal, which would be 3, 3, and then final push. I mean, we are close. Like normally, I mean, we're close enough. I think that's what we have to do because if you draw this line, you see it has never fallen through it in all these years. It's probably destined to do that. So I think we're going to have to label this like a little more bearish and more conventional. But then a big extended fifth wave, which means it's a very dangerous chart as of now. Because it means it could have topped. All right, whoops here. Let's see. I mean, that monthly candle is horrible. I mean, it looks like, it looks like it went parabolic and it's about to break the parabolic move. The monthly cycle is just wide open to the downside now. It's been on this like support, like kissing this, hugging this, and it's just, once it crosses, it's going to crash. So yeah, I think this is a very dangerous chart for longs. I think the top's in, and if it's an extended fifth wave, we have seen time and time again it correct all the way back down to the 4 low. Now it may take years to get there, but they all do. They all do. Most of them do. I can never say all, but most of them do. We watch on our channel. So maybe let's see if there's a short trade. So if this CVCL breaks 450.25, you can short it in 3 wave bounces. So if we come down and then we rally, you can short that rally as long as you see 3 waves up like that. Okay, that's the short entry I'd be looking for. So that would be the ideal setup for the short to ride this down into oblivion. But as of now, yeah, I mean, it looks like it's ready to melt down. I mean, look at this thing. So we're, I think we'll just call this WX for now. Right, and it will probably bounce. Have another little later. Probably do something like that. Okay, so I think that's what this chart is telling me right now. It would have been different, but this is if this is moving up in 3 ways, it's a 5, and it also looks like a 5 when you really look at the monthly cycle, all the bearish divergences, and then this, like we never had, like it seems like it's ready to correct. So let's see what sector this thing is. What does this guy do? What does this stock do? Oh, it's residential module homes, manufactured homes, mobile homes, RVs. Oh yeah, that sector is screwed. I just watched something that said they just marked down RVs 50% from MSRP a couple years ago. They can't give them away. There's this dude on there. I think he's from Ocala Motorhomes or something, saying he's got an RV that he's selling that's literally got like 8,000 miles on it, and he's selling it for like it sold for 240,000 like a couple years ago, and he's marked it down to 120,000. So you tell me if RVs is where you want to be. Yeah, so I think something's fucked up with housing. I think housing's in a lot of trouble, and we see the XHB breaking down hard. So yeah, this makes a lot of sense. This chart makes a lot of sense to me. If that's what they're making, because let's just face it, higher interest rates isn't good for people buying these things, and a recession and all the higher energy prices and everything else, people aren't going to be buying this stuff. So yeah, I think fundamentally this makes sense that this kind of chart would happen. Okay. All right. Okay, bull. Let's look at bull. That's been another one that just wasn't able to keep itself together. Let's see what's it been up to. All right, so we last we updated this, looking for a 5, 1, 2. Probably do that. So we're almost there. All right, I'm getting there. Let's take a look. So let's go to the higher time frame first. Daily cycle. A lot of bullish divergence. So we don't want that. Believe it or not, this has to come all the way back down and take that out. So you're going to need even more panic. Boy, I don't know what I guess whatever this company was trying to do, it failed at doing. I don't know what its purpose was, but obviously it failed at its purpose. So this is going to collapse. This is going to collapse. This is going to be one of those go to zeros. You guys are going to ask me about in 10 years. It's going to be like, the chart's going to be like $10,000 a share, because it's going to have so many reverse splits. So yeah, I mean, this is about to have a massive move down. Let's see, how did earnings go? Yeah, I don't know why it's so bearish. I don't know what's going on. Let me see if I can make fundamental sense of this. Financial services, trading. Well, oh yeah, financials are screwed. No wonder. We just looked at, if Bank of America is going to collapse, what do you think is going to happen to these small financial, these kind of speculative finance? They're going to get blown up. I mean, we have, if we think Bank of America, JP Morgan, all these companies are in major bear markets, if you have financial anything, it's toast. It's like, get out of it. It's maybe too late to get out of it even. I mean, because we have the financials entering a big bear market, and we've been saying that, and we've expected it. It's not news to us, and most of my members may have already been positioned for that to profit from it. So I'd be really careful on the financials right now. I mean, look at what we're seeing with private credit. We're seeing redemptions halted. We're even seeing rumors of banks just halting redemptions altogether. So then again, those are rumors. I'm not going to even say it because I'm not causing no bank run. But I think there's something wrong with the financial system that it's not obvious yet. I think private credit is a canary in the coal mine, but something else has gone wrong. Something else has gone wrong, and we just don't know what. All right. Let's look at some of these other cycles. So one thing we could see in this V wave, just to make it more painful for the bears, is this. Okay. because we are seeing bullish divergence and it is pretty oversold on the daily cycle and even the weekly. I mean, maybe you can get a rally like this. So again, you can't just come here and go, I'm going to short, because that's your scratch off. I'm going to go play, let's go play, let's go to the roulette table and give it a shot. Like when we were talking about like the back test, like that would, that's the area. But now I think, like I said, the sequence isn't over. Okay. It looks like it's missing another swing down. It could be starting that swing, but I can't rule out the possibility of a whipsaw back up and then it collapses. Okay. And it isn't a sector that's in a bear market that I have expected to go lower. Okay. It is what it is. Okay. REI. Ring energy. Let's take a look. That looks pretty good off the low. All right. Let's see 5 waves down. All right. Weekly, no divergence on the weekly, but on the daily, we're seeing it. Could be a 1-2-1-2. So this is conservative. Okay. But you see how there's like a dip and another high here? I almost want to go with another 1-2 here. Yeah, I know. I think what we'll do. So you have like 1, 2, 3, 4, 5. So I could put the 3 maybe here, 4, and put the 5 there. And yeah, just like a little flat. But we didn't correct the whole cycle on that pullback. So yeah, it's tough to say. So this is tough to say. Either we finish this whole cycle and it's going to surprise us with a big move down that kind of completely, reset the cycle now, right? Or it's going to extend, right? And you have a 1-2, 1-2, and it extends, right? I think we got to go with the 5 in. Because I think you got to stay conservative. It seems like it's fading, all that divergence. I mean, the only problem is the weekly doesn't have any divergence. Yeah, when you look at the 45-minute, yeah, I think what we'll do here, I think from a count perspective, I think we're going to put the 3 here. Just the weekly cycle shows no divergence, and we'll make a 5. I think Wessel will go it. It's very tough. It's a very tough chart on the shorter time frame, but ultimately we like it higher from the all-time high, right? From up here, because we have it in a flat from this peak, right? Like A, B, C, and then this is 1, 2. So I would definitely be bullish on it. I think the data we have is kind of somewhat incomplete to make a good short-term forecast. So a lot of times when I do my personal trading and I see something like that, I'll just label it like this. I would just go, okay, we have a 1 and a 2, and they're just kind of like, we leave it open-ended because there's probably like 5 different ways to label this. So I think when you just look at the bigger picture, you have a higher high here, you made 5 up, it's likely to come out. You've obviously ended this downtrend. There's no sense of trying to time the market. I think you just kind of hold on and let this play out. Okay, I think that's how you do it, and I think it should just continue to build higher highs. And it seems like it's been following our path even before we even knew there was a war, right? We kind of had this path, so we just stick with it. I wouldn't be surprised we'll be up here soon. Okay, but again, shorter time frame is a possibility. I'd probably force the lay. I'd probably do like a 3 and a 4 and something like that if I was forced to label it. Okay. BBAR, Argentinian bank. Yeah, how's that been doing? So that one I remember because we got the low right on that. One of these banks we did pretty good on. All right. So we have a big 1-2. It's not labeled, but you get it 1-2. 1-2. We came up. So again, emerging markets in general are pulling back, correcting. I believe that would impact these stocks as well. I don't know if it's represented in the EM or not. But I think they kind of trade together. In general, it's a big basket. Dollar strength isn't good either. Uh, you know, we could try. Basically, we have to finish an impulse now because it's a flat. Okay. So we can try to count the waves and see where we're at with this thing. So it looks like, see, there was your 1-2. See, that's the problem. It could have been the low there, but the market is now pushing it even lower. So that's the problem. That's the problem. Let's look at the higher time frame though. Let's see if it confirms. Yeah, it even confirms it for. So that's not good. Okay, because you're gonna run out of room. But it seems like it's gonna go lower. It makes sense to me. So yeah, it's probably coming back to retest the lows. Coming back into the box. All right, so something like that. I think it's about to come back into the box here and try to retest these lows. We expect the lows to hold. It's going to need a risk divergence. It's close to doing it already. But let's go to the higher time frames is what matters. It needs a risk divergence, and then find support down in this general area. Okay. Probably when the dollar peaks and the EM index hits our box, the members have that as a box, then this probably will be close to bottoming. Okay. In general. So something like that. That's what I'm thinking. And if we break this low, yeah, then we'd have to go to a more of a conventional label where this is just A, B, C, or something. See, that doesn't even work because it's only 3 waves up. So it would be more than likely we'd be in a big we'd still be in 2, obviously, but we'd be in a big sideways consolidation. It'd be like W, A, B, C, and back down again. So it'd be a big wild mess for years of up and down and up and down. If this low breaks, if it holds, it can potentially extend into the like I have here. But yeah, the thing is, it could have found the low. It could have bottomed technically right there, right at this low, but it didn't. It didn't hold. Didn't hold. So no matter what happens here, it should go lower. Like even if they squeeze it back up in 2, it should go lower. Okay. So that's BBAR. Next buy area, I've been looking for I'm thinking like $9.70, $10, somewhere in that area. That'd be the buy area. And then I would be buying it against 784, the low, 773. All-time low. Or this low, not all-time low. AVA. Okay. What is this one up to? So this is a classic example of we never got to 5, right? So because of that, it turned corrective. So that's the trouble with some of these charts. So we could still be an X. So it can be a lot of things here now. So let's see what we've got going on. See, it's close enough to taking out divergence. You have 3 up, 3 down, 3 up. So the problem is it could be a lot of things here. So we're showing 5 waves up here. So let's look at this wave and see if it's not a flat off of that peak or not. It's not. So it's 3 waves down, 3 waves up, 3 waves down, 3 waves up. So it's really tough. And to see how it's already starting to break down again. So I hate to say it, but I think it could double correct. It could come back in another 3 waves. I think it has a high likelihood of a double correction. You get 3 waves down, and then you need another wave down. So I think it's going to have I think it has a high likelihood of a double correction. Again, it should hold the low at this $2 level, but when you look at this structure, it looks like it wants another leg lower. It's just not ready yet. It's just not ready yet. Okay, so I think that's it for AVA. Yeah, there's really not much else to say on it. It does look like on the daily cycle, see how you're just rolling over? So you're just starting the daily cycle correction. And this trend line is likely to get breached. That will create that sell-off, okay? That's why we have it potentially selling off. Okay, so I think I covered everyone's super chat. We'll just take one last look at the markets and we'll call it a night. So markets are up. And like I said, SPY has a lot of possible paths here. Could even whipsaw you back up. I mean, if they enough optimism, the Dow Jones also is in B, and you could go A, you could do the same thing here. So yeah, I'm not surprised technically the market can easily rally. Like we could see the Dow Jones rally from where we are at open. We can come back up. Where are we at? 46.5. We can go to 47.4. That's 900 points. So yeah, it's a erratic market. It's very tough to shorten the hole in this market, but it's also hard to go long. So it's a very tough trading environment. So yeah, we could still be in B. It could still pump. Doesn't have to, but ultimately expect more downside in the market, no matter what happens with the day trader or the pajama traders tonight. Like these are just day trader night fight. These are the shorter cycles, right? And the thing I like about our system is you don't have to be stuck at your screen because you buy them, early or late. Well, I think I'm going to wake up in the markets at 690. Probably not. I probably have a lot of time to figure out what to do. But if you're trading the 5-minute chart, the 1-minute chart, even, oh God, I mean, that's crazy down here. I don't know how you would even guess where the market was heading. All right. Question, is it hard to have an accurate ElliottWave count of an acquisition spec company the days before the acquisition change? Well, if it affects its price, it would be hard to do it. So yeah, because it doesn't like an acquisition, right? It's going to change their the price they trade at, or they may already be priced in, but then they have post merger. Right? So I don't know. I think it's better to trade. I think it does affect it, honestly. Some people would say it wouldn't. It's supposed to be, it's supposed to look through that type of thing and even predict it. But I think when the company completely changes its character, I think the fractal, the chart, I think it changes. I think it changes things, and the price structure change. Like the price itself could change post merger, post acquisition. Sometimes the deals fall through, at the last minute. So, top bets for the stock. Yeah, I mean that's a warning sign. If copper can't get a bid, that's a canary in the coal mine. The AI trade's coming to an end. So for you guys that stayed on to the very end, again, this you get this little nugget. If copper breaks down, this is your leading indicator. The AI trade's breaking down. It's a leading indicator, and you can do your research why, but it is. Watch the specialty gases, watch copper. They'll break down first. Now, if copper can stay bid, that means probably AI demand is still happening in the real world. There is, this is, go look at copper futures. Look at that. It's your leading indicator into what's happening and what people are thinking about in terms of demand and building out data centers and things like that. So if this breaks down, like I have shown, more likely the AI trade is over as we know it for a while. If this can break higher, then that's good for growth, for the economy, for GDP, and the cyclical trade. A lot of things, but this is a canary in the coal mine. So yeah, COPEX, if it broke the stop, then that's a sign that this may be ready to come take a tumble down. But I was always want to play the long side, especially of this, because again, the bigger picture on copper, OMG. I mean, are you kidding me? Look at all this. Yes. And this is actually needs to be updated to a higher degree. I mean, guys, so this is just a temporary setback for copper. So that's why I want to be aggressive buying copper. If we stop out, we stopped out. That's fine. Because at some point in the next 3 or 4 years, copper is going to be much higher than where it is today, in my opinion. Now, it could be data center driven. It could be just pure inflationary dynamics. It could be weak dollar. It could be all of those things. But, AI driven. But this pullback with silver and gold may be your last chance to buy this stuff. So just think about that. And again, we watch this all the time, our elite group. And what's happening in the metals tonight, we expected this to happen. We had the short here. We expected this sell-off. This is not a surprise to us. But this is a last chance soon to buy these metals at these prices, I believe, for a long time. So take advantage of that. And if you don't know where to buy them, that's where you'll follow me, because we're watching all of them. We have levels on all these metals that I have in mind. But there's pain that has to happen. What's the dollar index doing tonight? The dollar index is even selling off and the metals are selling off. That's not good. That should be helping the metals. It's not. Yeah, it is strengthening. Interesting. All right, guys. So I think I got everyone's comments and questions. I just want to look through it one last time. Yeah, EONR, I did show it. I did show that on the weekend, the count I have on it. And of course, if we see an opportunity, I will definitely point it out. And kind of too bad we missed that, because that would have been a good catch. So it sounds like you got in on that. So that's good. I think we did that on the live stream, EONR. So once in a while, our live stream, we can pick up those big ones. It was on a live stream that we caught like QBTS, the quantum stock at like under $1. And then even SanDisk, someone asked me about SanDisk when it was way before it pumped. So like once in a while on our live stream, we get these big runners. So we have to definitely pay attention. I definitely go back every day after our live stream. I go back on our list and I take a little look, because I'm like, what's the next SanDisk? Because one of you guys probably has it in here. I just don't know, because it always happens. Right, I'll cut in 4 or 5 months. We'll come back, and there'll be one of these on this list is going to be up like 400 or 500%. It always happens. So that's why I'm always like, okay, what do you guys? Because you guys tend to get plugged in too. So we all help each other out, right? We find these and bring these ideas out. So that's why I always go back and look, because, like I said, I've been doing the live streams long enough. You ask me about them, constantly. 4 months go by, you ask me, I'm like, oh my God, I gave you that level before. I should have bought it. Like, it's like up 400%. So it's like, and it's what we said. So I do want to always like to go back. So we get ideas from you guys. And if we do see it, I'll present it to our members, of course. Make sure we do that. Anyway, good night, guys, or good morning, good afternoon, wherever you guys are live. And let's see what happens tomorrow.